Hi guys, welcome to my channel. Before we get started, make sure to hit that like button and also subscribe to my channel. Credit score demystified. So make sure to watch the full video. I'd rather not think about credit, but it does come up from time to time and can be a bit of a mystery. It is assessed that 80% of credit reports have erroneous data. There are critical failures and recording errors among the inaccuracies. Every year, you should check your personal reports with Equifax, Experian, and TransUnion, the three main repositories. A soft pull, which does not affect your credit scores, is when you pull your own credit. Additionally, your personal scores differ from those viewed by lenders. Your score will not be affected at first when I pull your scores as a lender. On the off chance that you permit different loan specialists to pull your credit, the drop in score could be difficult. As long as they are all completed within 45 days, the system considers each one to be a single pull, and you are shopping for fewer pulls. Pay is absolutely unessential to the scoring models. The utilized algorithms are only concerned with negative data. It does not know where the money comes from and assumes that you will pay on time. Every one of the agencies utilize to some degree different scoring strategies, typically founded on the Fair-Isaac model, yet the greatest distinction is brought about by the merchants who report information. Instead of reporting to all three bureaus, a vendor will only be able to work with data from one or two of them. Small banks frequently only report to one bureau. All three credit bureaus receive information about installments and revolving credit cards from all large banks. When you're trying to build credit, I typically advise getting loans and credit cards from larger financial institutions. These organizations can assist you with settling commitments, frequently for not exactly due for an expense. They are unable to make any changes to the report, such as obtaining negative data about late payments, collections, judgments, etc., taken out of the report. Negative information remains in the report for 7 to 10 years, depending on the type. Over time, the effect on the score will diminish. Except if you use credit, you can't fabricate credit. Additionally, it is extremely challenging to purchase things, particularly a home, without credit. The scoring model takes into account approximately 35% of your credit card usage. If you closed any or all of them, the algorithm will no longer have access to useful historical data, which will typically lower your score. Use your major credit cards sparingly. You don't need to allow them to turn over, making just a base installment, over time 1 month to one more to get the great consequences for your FICO rating. To avoid paying interest, charge things and pay the card off in full each month. In any case, do utilize them sometimes. I advise clients to charge a tank of gas a month and pay it off. If you struggle with resisting temptation, keep it in a drawer between meals. Banking data isn't essential for a FICO rating or report. Yes, negative information could be removed if it is incorrect. You paid your car loan on time, for instance, but the seller shows you as late. If you provide the bureaus with your bank information in a timely manner, they will get in touch with the vendor to correct the information. Within 30 days of receiving your request for a review or correction, a bureau must communicate with the vendor. You won't get any points if you think you can just put in dispute on a credit report to dispute something negative. There are still people who prefer to use cash rather than credit cards or loans. Sadly, banks are reluctant to loan to individuals with no deliberate history. I propose to non-credit clients that they ought to get 2 to 3 Tradlines, and normally the most straightforward course is MasterCards. They do not have to be cards with a high limit. Indeed, even $500 works. The scoring models couldn't care less about the dollar sum, simply the ideal installment, and keeping the sum utilized at 35% or less of as far as possible. The score is impacted more negatively the more frequently the high limit is used. The majority of lenders really want to see 3 to 4 open and active Tradlines on a credit report with a 12-month history. How to maintain good credit score. Having a good credit score has many advantages, including lower interest rates on loans and credit cards. You can also save money on insurance and security deposits for new utilities and cell phone service if you have a good credit score. Understanding how the credit scoring framework functions and playing by those rules when you can will assist you with keeping a decent score. Your most recent statement for a loan or credit card should show your current credit score. The credit reporting agencies also offer the option to purchase your score. Be wary of credit services that claim to provide free credit scores, as some of them will ask you to sign up for a monthly subscription in order to receive your initial free score. Realize what goes into a decent FICO rating. 5 critical snippets of data are utilized to work out your financial assessment: your installment history, credit usage proportion, credit age, blend of credit, and new credit. A good credit score almost always helps, but if you can get credit with good terms, you might use it more often to make purchases. That can mean paying revenue and expenses that you could never have brought about assuming you paid cash, conceivably overspending, and hauling your score down on the off chance that you eventually become overstretched and can't stay aware of installments. Sadly, the credit scoring system does not always accurately reflect a person's lending risk, particularly for those with lower incomes and many people of color. The financial system's inherent bias has been criticized for being perpetuated by current scoring models, which, for example, take into account mortgage payments, but do not typically take into account rent. This works against racial minorities who have not enjoyed homeownership at the same rate as white people due to redlining. Positively, consumers can now have utility payments recorded on their credit reports, thanks to services like Experian Boost. Different administrations can get your lease installments onto your credit report. If you want to keep your good credit score, you still need to pay attention to how traditional scoring systems work, because lenders may use a credit score that doesn't work with these services. Don't forget to pay your bills on time. It's important to pay all of your bills on time, not just your credit cards and loans. If you fall behind on your rent or utility bills, payment activity on those accounts could show up on your credit report, even if you are not using one of the third-party services that can report your timely payments to the credit bureaus. Keep on taking care of every one of your bills on opportunity to keep a decent FICO rating. Maintain a low credit card balance. Your credit score will suffer if your balance is higher than your credit limit. To maintain a good credit score, your combined credit card balances should be within 30% of your total credit limits. The lower the balance, the better. Charging over 30% of your credit limit is dangerous regardless of whether you intend to take care of the equilibrium when your installment is expected. Card guarantors commonly report the equilibrium when your assertion closes, so that is the number that will be thought about your credit report. Don't close old credit cards when you close a credit card. Your credit card issuer no longer sends updates to the three major credit bureaus, Experian, Equifax, and TransUnion, which hurts your score because the credit scoring formula places less weight on inactive accounts. It's a good idea to keep tabs on your accounts online and pay enough to reduce your balances to as close to $0 as possible just before the billing month closes. The credit bureau will completely remove the history of that closed account from your credit report after about 10 years. Losing that history will shorten your average credit age and lower your credit score. Shutting a charge card likewise decreases your accessible credit. For instance, in the event that you have 3 cards with a joined credit cutoff of $10,000, and you close one with a $3,000 limit, your consolidated credit breaking point will be decreased to $7,000. Since you want to keep your MasterCard adjusted at under 30% of your accessible credit, shutting that card diminishes your limit by $900. Limit your applications for new credit. Too many credit requests, particularly from MasterCard guarantors, likewise can adversely affect your score. Applying for numerous visas in a brief time frame can make you look dangerous to banks. However, various requests for a vehicle credit or individual credit in a brief period are treated as a solitary request, on the grounds that frequently they simply imply that the purchaser is looking for the best credit. Check to see that you only apply for credit when absolutely necessary. Your average credit age will also decrease if you open a new credit card account. The numbers may fluctuate based on the scoring system used. The FICO score, which is used by the majority of lenders, can be anywhere from 300, which is considered to be very poor, to 850, which is typically regarded as excellent. Watch your credit report. Since you do everything right with your credit, it doesn't imply that every other person will. Blunders could wind up on your credit report, prompting a drop in your FICO rating. Incorrect information on your credit report can also result from identity theft and credit card fraud. By reviewing your credit report on a regular basis throughout the year, you can catch these errors earlier, rectify them, and maintain a good credit score. So, that's it for today. We hope you enjoyed the video. Use the comments section below to tell us your thoughts about the video. Also, make sure to subscribe to our channel and click the bell button to be notified of all the latest videos.